In the last Build episode, we explored all the reasons an investor may say no to your big idea. If you missed the episode, I've included a link to it below this video. In today's episode, we're going to dive into what it's going to take to get that yes from an investor. So stay tuned. Welcome to Build, brought to you by Pivotal Tracker. I'm your host, Purnima Vijay Shankar. In each episode, innovators and I debunk a number of myths and misconceptions related to building products, companies, and your career in tech. Now, it can be very disheartening to hear no after no from investors and make you wonder whether you're eventually going to hear a yes. But it is possible, and in today's episode, we'll talk about what it's going to take to get that yes. Today, we're back with Ushma Garg, who is a CEO and founder of Gobble, and Danielle Morel, who is CEO and founder of Mattermark. And they are both investment partners at X Factor, a new investment firm focused on funding female founders and mixed-gendered teams. So thanks for coming back, ladies. I know last time we talked about all the many reasons that we've received a no. This time, let's turn it around and talk about what it's going to take to get a yes. And let's start by reveling in that moment where we each got our first yes. Danielle, when was the first time you got a yes?
I got my first yes from Dave McClure. We were sitting on the curb in front of their new office they had just opened in Mountain View. It was my birthday, and it was the "you can quit your job now" check. So awesome. It was extremely exciting to kind of hit that milestone.
Yeah. What about for you, Ushma?
I got my first yes from Ben Ling and Keith Raboy. I remember going to get a physical check from Ben. He was at Google at the time. Now he's a partner at Khosla Ventures. And so, you know, we had been meeting and going back and forth, and then I showed up there, and he just, like, wrote this check. Like, that was more money than I had ever seen in my entire life. He was like, here you go. I felt like I was, like, this bodyguard, like I needed an armored truck. I felt like anybody who looked at me could see that I was carrying, you know, tens of thousands of dollars in my hand. It was really funny. I remember just being so excited, but also, like, funny enough, just like so careful and so nervous carrying that check literally all the way to the bank.
Nice. So you weren't like Serena Williams, who just hopped into the ATM and tried to put it in the machine or something like that. She did like a drive-by with one of her first.
Oh, yeah?
Yeah. With one of her first, like, Grand Slam winnings. Just like,
I didn't even have a bank account.
There you go.
That's awesome.
Yeah, that's awesome. All right. And then what did you do right after you got that first yes, after you deposited the money in the bank?
I don't think I deposited it for a while. Like, there's all this stuff that has to happen, actually. So we also incorporated on that day, just luck of timing. But yeah, I mean, I think it's really weird. You get this check and it's like this life-changing thing, and then you like kind of have to go back to your, you know, crappy one-bedroom apartment with no windows in San Francisco and like get back to work.
Yeah,
keep coding. So like it's bizarre. This like thing happens and you want to like shout from the rooftops like, ah! But on some level you just are like, oh shit, like this is real.
Yes.
Does that resonate for you?
Absolutely. I think with every great success, there's just great responsibility. And so now you have this amazing check, and certainly, you know, it's time to, you know, crack a bottle of champagne and celebrate for a moment. But with that comes, you know, everything that you were planning to do and you told the person you'd do with it. And not only that, it's just the first check. And typically you're raising some kind of round, and it takes 10 to 15 angel investors to get it all together. So it's a huge milestone that I think people can, you know, take a sigh of relief, but still have to carry it to the finish line.
Now, one of my first investors was somebody who understood my niche market. And I know we talked about this in the last episode, but once I found him, actually fundraising became super easy because he went out and it kind of rallied the other folks who were kind of on the fence, right? It was, I believe in this market, I believe in this founder, I believe in this idea, I'm gonna write this check, and you all would be stupid to not follow. Have you had that experience as well?
Yeah, I think different investors take different approaches. Sometimes they go and create the syndicate, and sometimes you do, and then they come like back you up by kind of adding a voice. But I think they're pretty networked. So most investors here talk to each other, or they're only one degree of separation away.
Yes.
So you almost feel like when you're beginning to fundraise, you can kind of feel the valley talking about your company. There's no like trace of it on the internet, but they definitely are asking each other questions and saying, have you looked at the deal? What do you think of the price? What do you think of this person? Do you know anything about them? Have you heard anything negative? Just all those questions, because there is no diligence tool, and I'm laughing because like Mattermark is part of that story, but when people are really early stage, it's really a reputational thing.
Yes.
And so I think part of it is going out and kind of beating the drum for you, and part of it is also they're fielding questions. So as soon as you say, like, as soon as I said, hey, Dave invested in us, then I should expect Dave is going to get hit up with people saying, what do you think of Danielle? Why did you invest? You know, et cetera, et cetera.
Yeah.
Right.
But I do think it's like, important to make sure that when you get some of those first checks that you ask the person who else they would recommend join the round. That would be leaving a lot of value and introductions and referrals on the table if you didn't do that, because this person has just expressed huge conviction in your vision. And so they'll typically or should be able to bring along at least a handful of introductions.
And also, I've got to add, I did not know to do that when I first started out. And I think it's because you think you're inconveniencing this person who's just written you a check.
Yeah.
But actually, they just wrote you a check because they want to make you successful. And so you should ask and ask and ask. They will tell you if you've crossed the line, but you probably never will cross the line. And it's really easy, as an investor now, to just kind of move on to the next thing and get busy. And it's not that I don't want to help, but I kind of assume if you're not asking, you're all right.
Right.
So ask, because I think it's totally true. And I think I did leave a lot of that on the table and probably made it harder on myself than I had to be at first.
Yep.
Yeah. They're also protecting their investment by getting their fellow investors to invest, right? Yeah.
Yes.
So last time we talked a little bit about kind of the stage that investors are at, and oftentimes that makes a difference. And Ushma, you sort of alluded to this. Now, there's a lot of different types of investors out there in the market today. There's VCs, angels, super angels, micro funds, and so on. So let's talk through what makes sense at each stage. And let's start with accelerators, because both of you have been involved with YC. So when does it make sense to approach an accelerator before or maybe after funding? And what did it take to kind of get in?
Wow. One secret that a lot of people don't discuss is that many folks that got into something like a YC got in on their third or fourth try. So I did not know that until I started talking to a lot of founders. YC might have given them feedback. Maybe they kept working on their idea and they got to a certain stage. So I think that you might apply, but you shouldn't just quit based on getting a no that we talked about. Even getting into accelerators at an early stage sometimes takes a few tries.
And why would you even recommend people apply? Like, why does it make sense to do that?
So I think it really comes down to helping you set up the company for success down the road. So what an accelerator or an incubator program is going to do is help you with your go-to-market, and that doesn't just mean your product go-to-market, it's also the marketplace they create for financing your company. So they're going to help you validate that you've got a venture-backable business, and they're going to help set you up with the relationships and the kind of communication pattern that you need to have in order to be a viable option for those investors. And that's really valuable, especially if you're coming to the Bay Area from somewhere else and you can't really build that network in a few weeks. You really need to be here, and so you're going to be able to get a lot of time back. Of course, they take equity for this, but I think it's probably one of the best trades you're going to make, because in the beginning, it's just so binary. You're either going to raise that round or your company's probably not going to exist. And so, early on, that's probably one of the best ways to de-risk financing, and then you can focus on product.
So you mentioned that marketplace pulling in intros for you. For the two of you, how did YC facilitate those intros to angels or super angels?
Well, in my case, we were very unconventional. I started the company without YC, and I wanted to build this idea, and I felt that there was a problem that needed a solution. So I started prototyping it. I asked my friends for introductions. I was luckily already here for 3 years after college, kind of building a network. So I could just start my own process and seed round and ask for introductions, start raising money, and we didn't need Y Combinator for the first couple of years of the company. Then it takes a while. First your company has to get funded so you can explore and iterate, and then you have to find product market fit, and you get to a stage of scale. So it took us a while to find product market fit, and I did YC in the middle of our company's story. At a time when we were changing models, solving the same problem, but with different solutions, and when the fundraising environment was really tough. So I had to make the decision of, if it's worth working on, I'm going to take what I can get. And at the time, that was joining an accelerator. So I think that that's a good example, because it shows that you might have been working on something for 5 years, And if YC can help you or an accelerator can help you, you should still apply.
Yeah.
And use that as a catalyst for whatever next funding round or whatever growth metric or awareness you're really looking for. But I would also say that you can't let anything like that stop you from building your company.
Right.
So any investor saying no or any accelerator saying no, you should be building something because you see a way for the world to be better with something. And you have to decide to just do that and do it anyway, regardless of how you get there.
So let's talk about kind of the mechanics behind this now. So there's obviously angels, there's super angels, there's microfunds, there's VCs. Walk us through kind of what the check size is, or who makes sense at what stage.
Right. So there's a lot of flavors. Generally, if you're talking pre-VC, then there's very few private individuals who are going to write more than like a $50,000 to $100,000 check. Generally, if you think about someone's net worth, they've got some chunk of their net worth set aside for investing, and it's probably like 5 or 10%. So you can kind of begin to understand what's going on there. But the easiest thing for anyone who's not a VC is just to ask them, what's your check size and how much risk do you want to take? Like, will you invest pre-product or no is kind of question one. And then post-product, it's like, what do you need to see from me to invest? There's so many investors now in that pre-Series A stage that I think it would be hard to give a blanket answer. But the most important thing is to just ask them, tell me about the last like 2 or 3 deals you did. Like how big were they and what stage? And I would try to not worry about getting them to do something exceptional. People kind of have their comfort zone with their personal money, and what they're doing is probably going to continue to be the same because they're anchored on their last check. So if they've been writing a lot of 10K checks, that's probably the check size that they're writing, unless like they come into a huge amount of money and changes their world. And then the other thing is you're going to have these weird institutional investors who will invest before Series A. I guess this is super common now. When I started fundraising, this was a lot less the case. So these are kind of these super angels, micro VCs. I don't really know what they're called today. Pre-seed.
Yeah, pre-Series A.
They call it all these different things. But fundamentally, those check sizes could be anywhere up to, let's say, $500,000. They're generally not leading or pricing around. No one has to lead a round if you don't have an equity round. So that's a big part of it is just, again, what size check are you normally writing? Do you need control in some way? Do you add a board seat? All those things. The good news is once you get to Series A, it's like a lot more standardized in terms of like ownership. So there's some rules of thumb, and I'm not going to say these and then you tell me if you think they're different, because I feel like maybe they're not all the same. One big piece of advice is don't sell more than 25% of your company before your Series A. So like fully diluted, when you run your whole cap table out, you don't want to be in a position where you've already sold half your company. Because what happens is a Series A investor probably needs to have 20% ownership just for them when they come in. So if you've already sold half your company, on top of that, it starts to be pretty demotivating. That could be a little higher or lower, just depending what's going on with your business. And then you, of course, have your other investors that might come in. So maybe you sell 25 to 30% of your company total in that round. And then the B and C and so on. The way to think about it is like the better you're doing, the more leverage you have. People generally sell like 15 to 20% of their company in the B, and then at the C, D, and onward, it's kind of a sliding scale downwards from there in terms of ownership percentage. And you might be thinking, well, doesn't this add up to more than 100%? And the thing is that you're diluting everybody else as you go. So you're selling a chunk of the whole company at that moment in time. So these investors, it's generally going to come down to fund size. It will line up with check size. And they're going to say something like, we raise a $150 million fund. We're planning to write $5 to $10 million checks, and then we're holding on to $5 to $10 million per company for follow-on, something like that. And you can just do the math.
Or like in our case, with X Factor, we have a $3 million fund, and we're putting $100K in 30 companies. And that's the rubric, So I think, to Danielle's point, it's your job to kind of understand everyone's rubrics and appetites so that you are not wasting your time and not wasting their time. And at each stage, and let's take the seed stage, for example, because it's one of the only stages where there's so many investors involved, kind of fitting all those puzzle pieces together to get to how much money you need for the next 18 months and a specific, material milestone. So I think you start out with calculating that money, and you get your friends or, blogs or whatever advisors to help you. And then look for people in that stage, and then fit those, pieces together and ask them to make introductions till you fill the amount.
So let's talk about that. How do you actually get these intros? if I'm outside of Silicon Valley, I'm coming in, or if I'm here and I've been an engineer all my life or a designer or something, and then I recently made the switch to a founder, I might not have that network. How do I get those intros?
So the truth is you're just going to have to get out there and talk to people. And I think the thing is you probably know people who can help you that you might not realize. Mm-hmm. It's pretty rare if you live here, even if you just moved here, not to know somebody who works at a startup. So you just have to start asking. And the truth is you're going to have to give away information to get information.
Sure.
Hey, I have a startup. Okay, everybody has a startup.
Yeah.
Hey, we're raising. Okay, it's really hard. Like a lot of people immediately are like, oh, okay, interesting. Do you know anybody who invests in startups? And the thing is, you're going to have to do this at scale. So you're going to need to go to events.
Right.
You're going to need to ask the people that you've worked with in the past. And you're going to need to do things that you might not enjoy doing, like going on LinkedIn and just doing a ton of research. Nothing is better than a warm intro. Mm-hmm. So even though this feels really weird and painful to ask, these are going to generate the introductions that are going to be the best possible. Mm-hmm. The next thing is cold after that. So anything you can do to get something warm, even if it's many degrees of separation, is going to help you more. And so that also might mean cold outbounding someone that you want to then get an intro through.
Yeah.
So portfolio founders are probably the best people to cold outbound rather than the VC themselves or the investor themselves. So if someone cold contacts me and says, hey, I'd love to get to know you and Mattermark, yada, yada, and maybe their plan is that they'd like to get introduced to Brad Feld. The reality is, if they can tell that we didn't click, they're not going to ask for that intro. And that sounds really, I don't know.
Transactional.
Yeah. But, it's business, so that's what business networking is. And I think the truth is, I want to send Brad great companies.
Yeah.
So if you're an interesting company and you, pitch me and I get excited, one, I might angel invest in you, which is, the absolute best way for me to introduce you to one of my investors. Yeah. But the other thing is, we all got helped in the same way.
Yeah.
So it sounds transactional, but it's also just, it's kind of how it works.
It's the culture of paying it forward. You know, everyone does that. And if they can't, if they'll be honest, if they can't give you that introduction and you do click, maybe they'll give you some advice, and then we go back to that whole idea of listening and staying in touch and sending people updates. But I would say leave no stone unturned. Mm-hmm. If you just landed here, there's Techstars or 500 or Founder Institute or Y Combinator or TechCrunch Disrupt or Golden Seeds or who knows. There's all these things you can apply to. Mm-hmm. And of course, if you are an island and you don't know anyone, you have to start out cold, but cold will soon become warm. And you have to play the numbers game in the beginning. And so just go to all the meetups, email everybody, send links, send product demos, just be creative. Oh, one hack that I had, which actually led to me meeting you, is that I would go to talks and sit in the front and come up with really good questions. And I strategically go to talks where I really wanted to meet the person. Right. And I knew they'd be a great investor or advisor. I would wait till the very end. They would give a talk, and then all these people would be crowding around someone like, Reid Hoffman. And in this case, it was Aaron Patzer from Mint. And so people were, talking to him for 30 minutes. And I waited till the very end. And he was like, oh my gosh, who's this person waiting? And I said, hey, I'll just walk you to your car. I have a quick question. And then he became a very early on startup advisor and advocate for me. Mm-hmm. So there's all these unconventional things I think that you can do to get out there. And they might be uncomfortable, but that's how we all did it.
Yeah. And it's funny. I actually mentioned this hack to a bunch of people whenever they want my time. I tell them I'm going to be at this event speaking. Some people take me up, some people don't. Some people have gone so far as to say, I'll pick you up from the airport. I love those people. Because I'm like, great, I don't have to worry about how I'm going to get from point A to point B, right? Or I'll buy you dinner or whatever. But yeah, I think it's definitely going out of your way to get that interest and build that network. So let's talk about what you guys are working on now. You are working on X Factor. So let's kind of dive into that. Why did you even think this was important? Ushma, you just rattled off 10 seed opportunities. So why X Factor? Yeah. Right? Why do you want to put another one in there?
There was not one female investor in our seed round. Mm-hmm. And I think I firmly believe that that diversity creates innovation, diversity of thought. And America in and of itself is this diverse nation and considered to be the best in the world. And it's because of all the different perspectives and kinds of people that we have here. So I like to emulate that in the company, and I would like that in our investors. I don't think that one perspective is going to make us this breakout, worldwide innovative company. So I think that X Factor is unique and necessary because it's brought together a partnership of 9 people, and it's all women. And we are all operators, founders, CEOs in active companies. We're not retired. We're extremely current. All these things, fundraising, hiring, strategy, growth, it's all on top of mind. We can add so much value to early stage companies. And we're just approaching it in this very kind of operators helping operators, allowing for badass women to help other women in a space where there just aren't as many.
Yeah.
And really just adding some more diversity to both the founder pool and the investor pool to build more breakout companies.
So you mentioned you were able to raise capital without having a woman founder. So why is that? Why do you think that's important, right? You did it. You proved it. You did it. You proved it. And I know in my last company, I raised from all men. So why is that important?
I mean, I think that it's important because it's hard, and the reality is we want these products to exist in the world. It's not really that these companies can't get funded. It is harder, but the best ones get funded. It's just, what are we missing?
Yeah.
What are we missing out on in the world that we could exist tomorrow? There's so many creative, amazing people who are not getting funded for reasons that have nothing to do with what the company is about. And the bad thing is kind of poisons the well, too. So there's people who aren't even trying.
Yeah.
And so I think we want to send this message that, look, we shouldn't have to exist. X factors shouldn't need to exist. And if we do a really good job and we make a bunch of money, people are going to realize that investing in women, investing in men, you want to invest in the best no matter what. So down the road, hopefully we can't exist. But
Nice.
until that happens, I think we need to, the only way to change it is to actually create competition.
Yeah.
So we are in competitive deals, and we are sending this deal flow. We're creating market for each of these founders because we're going to need to see a lot more female role models at the top. Ushma's company is progressing, Mattermark's progressing, but we're still very early stage, and there's not a ton of examples of huge exits run by women.
Right.
So I think we're really great examples here, but it's very early days, and the best chance we have of seeing those results at the end is to put as much as possible at the top of the funnel. And I want to say, I also think it's just an incredible investment opportunity because it's underinvested so dramatically. Frankly, we should be able to see incredible returns partly because there's just so many opportunities that haven't been taken.
Yeah.
So I feel like not only is it awesome for founders, and I'm so stoked about them, it's awesome for our LPs, and it's going to prove to LPs that female fund managers can return awesome results as well. And you know what? There's more asymmetrical opportunities like this to take. There's room to create tons more funds focused on women. You could take this exact same approach with any minority group.
Yeah.
So it shouldn't have to exist, but while it does, we should try to create wealth for all the people involved, and then long term, I think, create competition in the market.
Yeah.
And it's so, this is not a not-for-profit. It's not a charity. We are looking at people who are like the grittiest of entrepreneurs and are in it for the long haul and ready to build like multi-billion-dollar companies and can answer all the hard questions. And we've gotten.
So what are some of those?
Yeah. Well, first of all, we've gotten hundreds of pitches.
Yeah.
And we've only made about 9 or so investments. So
Since July.
So in just the last 3 months, we've looked at so many companies, and I think people assume, oh my gosh, there's a female investor, she's going to invest in a woman. But I think it's out of respect to founders that investors ensure that they are looking for and helping you build huge companies and use your time in the best way possible.
Okay. So what are you guys looking for in your, and what's kind of, you said your check size is 100K, so you're looking at early deals. But what else are you looking for? What's it gonna take to get a yes?
Well, the first thing is that we are definitely looking for a return that's pretty impressive. So, even at the early stage, if we invest, let's say, $100,000 in $1 million round, I would say the average post-money valuation is like $8 to $10 million.
Okay.
So right away, to get to 10x outcome, we need to see a company with really meaningful revenue. The good news is we don't technically need to find the billion-dollar companies to have a really successful fund, but I think the reality is we want to find those outliers.
Sure.
So we're just like any other venture firm at the early stage looking for the most impressive opportunity to deploy the capital. We've got 30 bullets in the gun. So we're also thinking, okay, we're going to invest this money over the next 2 or 3 years. Is this the best deal that I could do this year for each partner? Each partner is thinking about this constantly. So you're looking at the entire field and you're saying, of all the possible ways to deploy this money, what do we think can get the best return? And that's what we're focused on.
And the partners hold each other to a very high bar. We're all like CEOs of our own companies, and we hotly debate every deal.
Okay.
So it is, and it's just incredibly smart, active people around the table. So it helps us make great investments. And I think that, it helps us keep the bar high because we have a lot to prove to each other. And I think we have a lot to prove as a fund. And that we want to, because it's not just, it's about, the great returns, but it's also, like Danielle said, about setting an example and about proving a point and hopefully making ourselves obsolete.
Mm-hmm.
So I think we should give some specific things for the viewers in terms of like what we want to see.
Sure.
Because people listening, we want you to pitch us. So
awesome.
You got to have a product.
Yep.
You pretty much have to have revenue, I would say, for our group, although we would still talk to you, help you get there, stay in touch. We want to see some amount of revenue or customers.
Yeah.
I would like to see high margin businesses.
Mm-hmm.
I mean, I'm looking for software scale. I don't think that that's true for all of my partners, but I struggle because I think we're looking for companies that take advantage of innovation to get an advantage in the market.
Yes.
I'm looking for people who have some special passion. I mean, Ushma talked about being mission driven. It's really hard. I think we really want to find founders who are in it for the long haul.
Yes.
So if they're just an arbitrage deal, I don't know that we're quite as excited about that. Again, I don't want to speak for all my partners, but I personally would prefer to talk to somebody who's like, this is the only thing I want to do.
Yeah.
I'm looking for patents and technology innovation.
Mm-hmm.
I'm looking for stuff that solves problems in the enterprise space and software space for developers, just because I actually think there are a lot of women in those fields, and I think there's more bias for women pitching those ideas than any other idea, and I think I want to give them that check so they have the confidence to go do all the rest of the pitches.
Yeah.
I want to write the quit your job check. That's the number one thing. So if you're watching this video and you're like, I would have to quit my job and work on this full time and I need $100,000, we want to talk to you, because the quit your job check for me was life changing. I think we would like to write that. So sorry, I'll let you tell them what you want.
Man,
just rolling in.
Yeah, Danielle really covered a lot of it, and I think just the founder DNA and passion and willingness, of course, like plays a huge role. But the interesting thing is that our partnership is so diverse that we have folks coming at it from retail, from consumer, from enterprise, from hardware. I mean, we've assembled this. And from like the finance companies and all, like healthcare, finance, like SaaS, etc. So it's really neat because no matter what your company is doing, there's probably an expert in our partnership that can talk with you, consider the deal, and at least give you feedback, if not invest. So I think that we are looking for breakout companies in all of those industries. But your
Our portfolio already has quite a range.
It has quite a range. I mean, we've invested in fashion, in hardware, in AI, in
developer tools, in machine learning, in ag tech.
Yes.
A huge range already.
Well, I can't wait to hear when they come out.
Yes.
So for our audience out there who's eager to get their idea out in front of you, how can they get in touch with you?
An email to hello@xfactorventures is perfect. xfactor.ventures is the domain.
Okay, what should they send you?
You can send us a pitch or you can send us a hello and we can set up a phone call. Either one is great.
Cool.
Yep.
All right. Well, be sure to take them up on their opportunity.
Looking forward to it.
That's it for this episode of Build. Be sure to subscribe to our YouTube channel to receive many more episodes like today's and great build tips. Ciao for now. This episode of Build is brought to you by our sponsor, Pivotal Tracker. Welcome to FemGeniere's Confident Communicator course introductory video series. I'm Purnima Vijay-Shankar, the founder of FemGeniere.
And I'm Karen Catlin, a former tech executive who's now an advocate for women who are working in the tech industry.
For the last 22 years, I have been speaking in public, and for the last 8 within the tech industry. I have given a TEDx talk, I've been a guest lecturer at Duke's Pratt School of Engineering, an entrepreneur in residence at 500 Startups, a mentor in residence at Techstars, and was the founding engineer of Mint.com.
I am on my second career. In my first career, I spent 25 years building software products. I started out as a software engineer and over time moved to the executive level, where I was a vice president at Adobe Systems. Now, in my second career, I'm an advocate for women which means I do a lot of public speaking about diversity, about women's leadership topics, and I've given a TEDx talk.
The Confident Communicator course is a live online course that Karen and I co-teach together. In this video series, we're going to give you a sense of what the Confident Communicator course is and what you'll get out of it.
You'll learn about the challenges Purnima and I have faced learning the craft of public speaking ourselves. You'll learn why we decided we just couldn't keep all of this knowledge to ourselves, and you'll hear from students who have taken the class about how they have become more confident communicators.
You're going to get a behind-the-scenes look at the entire course. You'll meet some past students and see how they went from being shy and nervous to poised and confident communicators. You're also going to meet employers and sponsors who found the course valuable enough to invest in and send their people. And finally, you'll get some sample lessons so you know the material that we're going to be covering. Sign up below to receive the first lesson immediately, where you'll understand why it's not good enough to just be heads down. You need to speak up to get the recognition you deserve. Ciao for now.